Hello everyone, I'm Rachel and I welcome you all to Executive Corner Expert Talks. Today I'm with Ali Zoabi, APAC Director for Arctic Intelligence. Now Arctic Intelligence is a regulatory technology company, otherwise known as a RegTech, that transforms financial crime risk assessments to help protect businesses. Here at Kalkine, we bring you industry leaders, successful business owners and market and equity advocates all under one roof to help you discover the insights of the stock market and help you to understand how you can create multiple passive income streams. So welcome to the show today, Ali.
Thanks, Catherine. Thanks for having me.
Great to speak with you today. Now, Arctic Intelligence offers a wide range of services. Would you like to introduce Arctic's offerings to our audience?
Sure, thank you. So Arctic Intelligence is a RegTech, so a regulatory technology provider. Everyone's heard of fintechs. Fintechs are doing a great job in disrupting the banking industry. RegTechs similarly are helping businesses meet their regulatory obligations via software solutions. And so Arctic Intelligence is Australia's RegTech of the Year and one of the world's leading RegTechs. We help businesses predominantly move from a spreadsheet-based compliance program to a software solution where they can conduct financial crime risk assessments using the efficiency and effectiveness of a software solution, whether that is across anti-money laundering, anti-bribery and corruption, fraud, modern slavery, human trafficking, wildlife trafficking, climate change, and other financial crime and ESG considerations.
Excellent. Now, you mentioned ESG there. Why is environmental, social and governance important to help in identifying and helping to combat financial crime?
Thanks, great question. So environmental and social governance is a very hot topic at the moment. Probably couldn't get much hotter. Particularly with the upcoming global conference on climate change. But there's a real convergence of issues that are combining to create a real impetus around an issue that already had strong momentum, being ESG. So ESG arguably started back in the 70s with a strong message that the business community sent to South Africa in the divestment of a range of businesses due to the apartheid regime. And it's really grown since then into anything that businesses feel their stakeholders value. So a business needs to consider the ESG considerations of all stakeholders, whether they're investors, whether they are employees, whether they are clients, whether they are regulators, or any broader sort of community that they impact. So a successful business needs to have a close understanding of the expectations within the markets they serve and needs to take meaningful actions addressing those considerations if it wants to attract the right clients, the right investors, the right employees, and if it wants to keep its regulators happy. So as an example, across climate change, we're seeing, as we all see, businesses around the world wanting to ensure that they are taking meaningful steps.
Excellent. And Ali, do you think it's more important than ever before to be aware of financial crime prevention and detection?
Absolutely. So financial crime covers a range of risk domains. So whether it's modern slavery or human trafficking, or anti-money laundering, or anti-bribery and corruption, or fraud. And often what we find is that these crimes are interlinked. So for example, those criminals or terrorists that are involved in anti-money laundering, they will fund human trafficking and modern slavery using proceeds from other crimes. And so it's crucial that a financial institution or a reporting entity is very much focused on financial crime risks and looks at them holistically, not in isolation, and looks at them at an enterprise level.
And how does your company proactively assess and detect these risks?
So we help businesses move from a spreadsheet-based financial crime risk assessment to a software solution. What we find is that there are different levels of maturity around Asia Pacific and around the world. Some businesses are doing some level of financial crime risk assessment using manual means, for example, spreadsheets. Some are doing that already on software solutions. Not many are as yet. And some businesses don't quite know where to start. So what we do is we help businesses understand the different risk domains that they need to be aware of, and then help them with going through the process of understanding the risks, assessing their controls, and understanding their residual impact, the residual risk rating in each of those risk domains, and then strengthening their controls in order to reduce the likelihood, reduce the consequence, and strengthen the controls around each of those areas. So what we find around Asia Pacific, for example, is that banks, foreign exchange providers, wagering businesses, gold bullion traders, remitters, generally they understand, for example, the need to conduct risk assessments, particularly around anti-money laundering. So we know that around the world, and Australia or Hong Kong or the UK are no different, very active regulators who are very determined to understand and detect where those businesses are not quite meeting their obligations. And so what we do is we help those regulated entities understand where their weaknesses are, assess the risks in each of those risk domains, understand and assess the controls around each of those risk areas, and then develop a residual risk rating. And then more importantly, understand an action plan. Where are we now? What do we need to do to get to where we need to be? Because if an investor, as I mentioned earlier, an investor, a client, or a regulator comes knocking, that you want to be able to demonstrate through actions that you've taken the right steps to address the right risks. And that's how we help businesses around the world. There's about 250 clients that use us already, and that's growing sharply. Essentially, what we do is we help them have an auditable, efficient, and effective software solution to enterprise-level risk assessments around a range of environmental and social governance requirements.
It sounds absolutely essential. Now, the Financial Action Task Force has been proactively sharing new international recommendations to tackle things like money laundering and terrorist financing. And how do you see the recent developments in the transaction monitoring and screening segment helping the industry?
So the Financial Action Task Force came about because the group of 7 countries, which we've all heard of the G7, the G7 in 1989, they came together, and one of the items they agreed on was there's a emerging global problem of financial crime, and in particular anti-money laundering, but also anti-bribery and corruption, also fraud, modern slavery, human trafficking, wildlife trafficking. And so the Financial Action Task Force was established by the G7, and the Financial Action Task Force is often referred to as FATF, the acronym FATF, and they're headquartered in Paris, and they will regularly monitor developments in particularly the financial markets, but in any other markets where financial crime is prevalent or could become prevalent, and they will continue to issue guidance as to how regulators should be policing and what regulators should be expecting of their regulated entities, which I mentioned earlier on, deposit takers, banks, foreign exchange providers. So anywhere where criminal enterprises have existed for centuries. And the challenge for criminals is, how do they take that dirty money and turn it into clean money? And so the Financial Action Task Force provides guidance to help regulators and businesses detect and prevent that cleansing, that laundering process. Because often that dirty money is then used to fund modern slavery or human trafficking. and often those businesses may well be highly unlikely to comply with other ESG considerations such as climate change. So it's crucial to keep on top of, for those businesses out there that are regulated. It's important to be aware of the Financial Action Task Force, have a look at the kind of guidance that they are issuing, because chances are the regulator in your jurisdiction is looking closely at what FATF is requiring and has either already imposed or is likely to soon impose the guidance that FATF is issuing. So as an example, just this week in the United States, the Department of Treasury issued guidance about transaction monitoring generally, but also specifically to an emerging market being the cryptocurrencies. And so that's just one example in one jurisdiction. You could look up regulator guidance in every jurisdiction and see a very close correlation between what regulators are doing and what the Financial Action Task Force, the G7 construct, has expected. So, as an example, businesses such as cryptocurrencies need to be aware of transactions that breach the thresholds that regulators generally set in each jurisdiction. For example, in Asia Pacific, generally the value is around about that $10,000 US. When a transaction occurs that exceeds that value, alarm bells ring, and further investigation is needed. If you're not doing so, chances are you will be identified by criminals as a softer target. You'll be exploited, and it's likely to result in further issues when regulators become aware of poor control environment that you have, such as issuing of fines, the damage that comes with the publicity associated with having those weak controls. So you need to be aware of the FATF guidelines. Something very simple that anyone who is interested in adhering to anti-money laundering principles, you need to be conducting regular enterprise level risk assessments for AML, CTF. And those principles are guided by FATF. For example, assessing your channel risks, assessing your business risks, assessing your customer risks, understanding the geographies and jurisdictions you operate within and the level of risk they present, either through their rankings on Transparency International or the United Nations sanctions listings for different individuals and countries. That's absolutely crucial. You can't operate in a vacuum. You can't just hope it's not going to impact you. It's not hard to do a quick Google search and see the businesses in your own industry, your own peers in different jurisdictions who have been called out by regulators and have received publicity they may otherwise not have wanted to receive. You want to be on the right side of publicity, the right side of history, so to speak.
Absolutely. Well, it's such an important space that you're working in. Thank you so much for taking the time to explain it to us. Thank you, Ali.
You're most welcome. Thanks for having me.
Thank you. Now, with that, I will sign off, but watch this space for more. Till then, stay apprised and invest wise with Kalkine.